All right, all right, all right. Happy Friday and welcome to Ask the Trader. So, before I start, I want to make sure that I'm not having any technical difficulties. So, if you could comment and just let me know that you can hear me clearly, I will go ahead and start. But again, this is Ask the Trader. I'm just waiting for a couple of more people to join. But if you could go into the comment section and let me know that I am clear, I will go ahead and start. All right. Pam said that I can hear you. So, welcome to Ask the Trader. My name is Joel Harrison. I am a full time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 15 years and over 30,000 hours of trading and investing experience. All right. Anything that we talk about today are the opinions of Joel Harrison. All right. So, again, welcome to Ask the Trader. The format for Ask the Trader is you can ask me anything. Now, I'm not going to make it about me today. All right. I want you guys to put whatever stock, give me one stock, give me one stock in the comment section and I'll try to analyze it to the best of my abilities. Today, we're going to talk about Frankenstein trading. So I would kind of, if you're going to give me a stock, give me a time frame. I'm going to try to teach you guys how to analyze a stock. All right, whether it's an intraday trade, getting in and out the same day, whether you want to be in it for 10 days, 10 months, or 10 years. I need you guys to specify how long you want to be in that particular trade, or if it's an option, or if it's futures, or if it's crypto. All right. These are the questions that we need to start asking each other. All right. And any image that I use today, just know that I created it on Ask Joel GPT. So if you get a chance, I did create this Ask Joel GPT for you. You can go to Ask Joel GPT, ask it anything you want. And 95% of the time, it will spit out an answer that I truly would give myself. So I'm very proud of this GPT that I created for you. We're going to be talking about the What Would Joel Do method. I came up with this method not to glorify myself, but it's a tool that you can use so that when you decide you want to buy something or sell something, uh, if you want to buy something or sell something, you can use my method to kind of have a clear and concise strategy for that particular asset class, whether it be crypto or futures or options. All right. A lot of you guys have a hard time doing that. And that's why I do so many consultations. Investing is a lifestyle. I want you guys to remember that it's a lifestyle. Everything around you is the stock market. If the stock market goes away, our whole life and existence is going to go away. All right. Everything that we use on a daily basis, more than likely, you can invest in it. So make it a lifestyle and it will truly take care of you if you start now. Uh, Always remember that you build wealth through investing, not trading. I know the name of the room is Insider Trading, but you create wealth through investing. Trading is just a means of creating the capital that you need to invest in yourself so that we can all be wealthy one day and show those receipts. All right, I'm going to talk about high level simplicity. High level simplicity is what the What Would Joe Do method was created off of. I would go on YouTube and I would go down the rabbit hole and I would, you guys would come to me and you guys would show me your charts and all the classes that you guys are taking. And I've been there and done that. I've done everything that you guys have done. When I laugh at you in the room, I'm actually laughing at myself. That's why I have the right to laugh because there's no emotion that you have not gone through that I haven't gone through. I've been trading, like I said, since 2007, 2008. So I've gone through the process. I've gone through a real estate market crisis. I've gone through Brexit. I've gone through an impeachment of a president. I've gone through COVID. And guess what? The stock market is still here and it's still the best tool to create wealth fast. All right. But when you guys come to me, take a look at this chart, right? When you guys come to me, usually you have taken 5 or 6 classes. You've, spent thousands and thousands and thousands of dollars taking all of these different educational courses, and you still get paralysis of analysis. And then when you guys come to me, and everybody does it, you want to take every single solitary thing that you've ever learned and you try to put it on a chart. Man, I learned the charts, and you guys feel like the more information you have, the better off you're going to be in that trade or in that investment. And that's not what investing and trading is all about. And this is literally how your mind is working. So, I tried to find all the different indicators out there that are popular that you guys are using and tried to throw it on one chart. And when I look at this chart, I can't even make a decision. I can't make a decision, short term, long term. I have no idea what I'm looking at. And it's so bad that you guys know that when I put all of this information on this chart, you guys see what it says there. Like the whole platform, the Thinkorswim platform actually shut down and said, Joel, you're using too much information to process this one chart. So imagine if the computer can't process this chart, how the heck are you able to process this chart? All right, you are on information overload. The reason why I can beat just about any trader out there on any time frame using the most simplistic tools, which is also the reason why I create the most receipts in the room, is because I've been there, done that. I've learned every single indicator that's out there. And I came to the conclusion that, the market either goes up or down. You got a 50% chance of winning. So why do I need 27,000 indicators to do that? Why do I have to spend $30,000 on a class to teach me why Apple is going up or down? And I get it. Some of you guys take the classes and you're embarrassed by it. Look, I took a $10,000 options class, 15 years ago before anybody even knew what an option was, right? And they gave me 4 CDs. I remember I was taking it with it was funny because Thinkorswim was called Invest Tools at that particular time. And they got me. I paid $300 for the class, and I drove all the way out to Indianapolis to take the class. Stayed with my mother-in-law in the snow. That's how committed I was. And at the end, after learning, support and resistance, kind of the basics, which is really all you need, this guy in this suit walks in and says, "Hey, what if you want to make even more money trading options?" And then charged me $10,000 for it. Now, I didn't get to sit with that individual. I couldn't call anybody and ask any questions. They gave me 4 CDs and was like, all right, go on your way. Now, I could go on YouTube and get all that information. I didn't have to charge they didn't have to charge me $10,000, but they did it because they could. And my whole thing is that, I've been there, done that, and I don't ever want any of you guys to make the same mistakes that I made, because if you put in the work and you work with somebody that's actually buying and selling the market on a daily basis, that's why I have opened up my messenger. That's why I have consultations. That's why I have the most basic classes that's going to get you guys on the right side of the trades or the investments. And I told myself I would never, ever, 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 ever charge $10,000 a class. I don't care how much money I have in my account, because trading and investing is where you should be earning your income anyway. You know, yes, you're going to have to do a consultation with me and it's $50 an hour, but I mean, dang, I'm going to be sitting there with you. I mean, I got to find out a way to play golf, right? Or if we go out to lunch and you buy me lunch and I tell you some of the gems of the market, everything's not for free, but I keep my costs down so it can allow you guys to do it. And I know you take that $10,000 or $20,000 class and you feel like you're obligated of using that information. I always tell people, look, cut that zero of a class and get with this hero. I mean, I know that's old school and it's corny, but it's for real. Like, just because you paid a whole bunch of money for a class doesn't mean that you're obligated to use that information, especially if it's the wrong information. Cut your losses and keep it moving. We just paid a lawyer $50,000 about a year ago to do some work for us, and the lawyer was terrible. Now we could have used the lawyer again, but we decided, you know what? Let's cut that zero, and we got with another lawyer that was way less expensive, but we got what we needed, for the money. So it's not always about money. Sometimes you might make a mistake, but just because you learned an indicator or you paid a certain amount of money does not mean that you're obligated to use it, because if it's not working, then cut it out. All right, cool. So, that's Frankenstein trading. Frankenstein trading is when you're putting everything that you've ever learned into one chart to try to buy and sell a stock. And that's what I'm trying to stop you guys from doing. So when you come to me, I literally say, whatever you've learned or whatever you think the market is, I want you to throw that out the window. Because like I said before, how many traders do you know come into the room and time and time and time and time again say, hey guys, you should be buying today. This is how it feels when you're going to buy. I told you guys that when the VIX goes above 50, everybody on TV and all the pundits are going to tell you that the world is coming to an end. That's how you know to buy. When people are crying, that's when you should be buying. Only about one or two of you, who've been watching my videos said, you know what, time and time again, I've seen the VIX hit 50. Joel buys something, comes out with his receipts the next day, gets the hate that he always gets. Hey, where was this when yesterday or 2 days ago? I'm like, just go back and look and you'll see, right? I'm constantly being transparent about what I'm doing. And if you're an ultimate member, you also get the alerts that are telling you when I'm buying and selling. But again, this is not about me. We're talking about Frankenstein trading so that you guys can get on the right side of trading. Stop putting 27,000 indicators on your charts. All right, we're going to start simplifying things. This is how your chart should look, right? Do y'all know that this is the same chart that we were looking at right here? Same exact chart. Same exact chart. This is all the information that I've ever learned and I paid all this money for. This is how your brain should be when you look at the chart. Because see, when I look at this chart, I see where the all-time highs are. I see that there was a blip here. I see that this was just a 50% move from here to here. I see that the 200-week moving average is angled up and this is a bullish stock. I see that when this is green and this is green, it's going up. I see that it's stair-stepping up in price so that when it dips like this, I should be buying it. That's how quickly you guys should be analyzing these charts. And I see a lot of paralysis of analysis because you have too much information on your charts. All right. And it's YouTube's fault. It's traders trying to make money off of education and taking you guys' money. I've been there. And I'm here to start teaching the basics again, the basics and the fundamentals of buying and investing and trading. And you will also find that this is very, very easy. This chart is so clean that it tells you what it wants to do. All right. If I want to buy the spiders multi-year, this is telling me even all the way back here to 2022, buy the dip. All I had to do was buy the dip here. That's one win. That's two wins. That's three wins. That's four wins. Maybe this is a fifth win. If you bought on Monday, the market is rigged to go up in price. Okay. The market is rigged to go up in price. And I want you guys to think about that. These financial companies that are out there, they're not in the business of taking money out the market and putting it in a savings account. I keep telling y'all that every single week when you guys work and you put money in your 401k, that fund's job is to take your money and put it somewhere, because whether you make money or not, they're going to make money off your money no matter what. So it has to go into the market. And as long as they're printing money, and causing inflation, that money is going to find its way into the stock market. Living in America is the best thing on the planet because Our market is the best market on the planet. Other countries invest in our market. If you don't believe me, look and see what happens at 12 and 1 o'clock in the morning in the futures market. When the Asian markets or the European markets open, they're also investing in our companies because we have the best companies on the planet. Literally, the nine out of the I think 9 out of 10 of the largest companies on the planet are here in the United States. All right. So you guys got to change the way that you think about the market. You got to change your mindset of this market is rigged to go down or a recession is coming or like these things are funny to me when I hear it, and it's funny and when the market sells off like it did last week, it's not funny when you're down 5, 10 or 15% in a day. But if you hold firm, you're gonna be okay. That's why I put my receipts out there and said, "Oh my God, I'm down $30,000," and then 5 days later, I'm up $5,000. I made all the $30,000 back, plus I'm up another 5 grand. Right? I had a consultation with somebody the other day. They were telling me how they were down $675,000 in one day, and then they made $1 million in the last 5 or 6 days, right? So it just depends on how you look at the market. You can use it as a piggy bank, or you can be afraid and stay away from it. All right, but it's rigged to go up. But so what we're going to do today, and what I want you guys to start doing, is I want you to figure out who are you. Who are you, right? Who are you? I know who I am. When I think of myself, I think of an Einstein. That's why I have Einstein Joel here, right? Most of us are smart. Most of us are intelligent. Most of us are able to take information and apply it, right? But I want you to know, I want you to think about who you actually are, right? Descartes did say, I think, therefore I am. I get that, right? We can think, but just because you think doesn't doesn't necessarily tell you who you are as an investor or a trader. And that's why a lot of you guys are doing this Frankenstein trading. You guys are mixing strategies. You're mixing investing strategies with trading strategies, and you literally are looking at the market in one way. I see a lot of you guys using the wrong charts. You're using a 1 minute chart for a 6 month trade, or you're using a day or a week chart trying to intraday trade, right? You're using the wrong charts for the wrong strategy. So it starts with literally just sitting down and asking yourself, who are you, right? When I first started swimming, and I'll get to you guys' stocks. I'm just waiting for more people to come. That's why I keep looking at the clock. When I first started swimming, there's 4 strokes. When I first started swimming, I didn't really have a coach that could really tell me what I could do. So we were weak on backstroke, so they put me in backstroke, and I ended up, being able to place at county and backstroke my first season swimming. And there's 4 strokes, in swimming. There's butterfly, breaststroke, there's butterfly, breaststroke, freestyle, and backstroke. And come to find out that backstroke was actually my worst stroke, and that breaststroke and freestyle were my best strokes. And that's what I ended up getting a scholarship in to swim at Howard University. All right. So, I didn't know until I started swimming and finding out who I am, what I was really good at. And a lot of you guys have not figured out who you are yet. You haven't figured out if you're a trader or an investor. And that's where I come in with the consultations, because a lot of you guys have unrealistic expectations when it comes to what you want to do with the assets that you have. And it's interesting to me because we are so smart, we are so intelligent, but for some odd reason, when we come into the market, we get dumbfounded by it. Like we come to it like it's a casino. You need to come into the market the same way you would a job, a relationship, anything. You need to know who you are, and you need to have a plan. You need to figure out if you're a day trader, buying and selling, within the first 7 days. That's really the definition of day trading. Day trading is getting in and out of an asset within 7 days. That's a day trader. Are you a swing trader? Anything more than 7 days where you buy something and you hold it more than 7 days is considered a swing trader. Or are you an investor? Are you buying Nvidia today to hold it for 12 months? Are you buying Nvidia today because you think that it's going to go to 6 trillion or 9 trillion dollars in market cap because that's where you make your money? Or are you a Frankenjoel? Right? And I was just like you guys. I was a Frankenjoel. I didn't have but one strategy, which is I'm just going to use all the money I have. I'm going to buy something today off of some news related event. And if it makes me money, I make money. If it doesn't make me money, I'm going to pull it out as fast as I can. All right. And when you come with that approach, you're gambling. All right. You're being a Frankenjoel. All right. I see you guys do it all the time. Right. The stock market, the other day when the VIX hit 50, I saw a lot of you guys selling your stocks. I saw a lot of people selling their kids' stock. Your kids. Now, if you're investing, the mindset should have been, well, Joel said when the VIX gets above 50, you should be buying the stock market. Not only should you be buying the stock market, you should be asking your mama and daddy and any friends that you have, do you have any money? Because we probably just hit a short-term bottom. Okay. But I saw a lot of you guys selling. Not only did I see a lot of you guys selling, I saw a lot of you guys getting even more short or more bearish. And I'm like, this is the cataclysmic event. See, this is what I'm talking about. You don't really understand the fundamental basics of the market. All right. There is a point where the selling gets so high that it's the end, at least short term. And that's why the market has just run for the last 6 or 7 days. And this is not something that I guessed or was a hypothesis. This is something that I talk about in every single solitary video from 2020 to 2021 when I was creating these videos. I've been super consistent about it. And I came in the room and with confidence, I would say, I'm buying this. I'm buying that. I'm buying this. Why are you not buying? I'm buying. Don't be scared. I know they're telling you the world's coming to an end. Don't listen to them. I know these guys have a whole bunch of money, but they're not showing you their receipts. They're not showing you what they're doing. It's an illusion. And then sure enough, the market goes up for 6 or 7 days. You haven't jumped in yet. And then you now have to wait another, 3, 4 years for an event like this. All right. Now, can we turn around? Yeah, but you need an event for it to happen. You need something like Japan having a margin call on billions and billions of dollars in order for that to happen. It was a perfect storm for the market to fall because the market was already falling. um, Iran was flirting with having a retaliation for what's going on over there in in Palestine, the Palestine and Iran. And then you had Kamala Harris, which just totally changed the presidential election by deciding 3 weeks ago that she's going to enter the race. You had so many different things that normally doesn't come out, which made a perfect storm for the VIX to hit 50. Now you need that type of event again to see the VIX hit 50. All right. That's why it only happens every 3 or 4 years. We might see 20 or 30 once or twice a year. 50 is just, come on, find some money, buy something. All right. So hopefully you learned this time around because every single solitary time it hits 50, I come into the room, I tell you to buy. And that's why I put out a post that said, I told you so. And everybody knew what I was talking about, at least the people that have been following for years. I didn't even have to explain what it was because that's how simple and how easy it is to invest in the market if you follow people that are actually buying and investing and showing their receipts in the market. All right, cool. So what I do is a high level of simplicity. All right, high level simplicity. High level simplicity. Right, VIX hits 50, buy. What do I buy, Joel? I don't care. Everything was down. But if I had to answer the question, buy the one of the 15 or 20 largest companies that are out there. Apple ran, Amazon ran, Google ran, Nvidia ran, AMD ran, Bitcoin ran. All the top assets ran for 10 days. Easy money. The easiest money you can ever make in anything. It's almost guaranteed. Now, that was for 10 days, right? Because when things run, and I'm going to teach you guys, I'm going to show you guys this when we look at the charts. And this is something that I always talk about. When the market trends either up or down, usually it's an average of 7 to 14 days. Well, we're on day 6 now, right? So it falls in line with the same things that I teach, which is in the What Would Joel Do method. All right. But you guys got what we're going to talk about today is doing the math. All right. They've been talking about this a lot on TV, right? You got to do the math, right? Trading and investing does take a level of math, right? Stock is down 20%. You got to know how much it will make going back up. You got to look and see when the stocks are dropping 20 or 30%. It's easy for me because I came from a real estate background. So, as a realtor, I would have clients that would tell me, hey, when I'm looking for property, Joel, don't show me any properties if I can't buy it 70 cents on a dollar. Well, what does that mean? That means it has to be at least 30% equity in it from its highest price or whatever its appraisal price is, so that they can ensure that there's enough money in that property where if they had to do any work, if they had to pay any realtors, there was profits there. Well, going into the stock market, it's the same thing. Everybody loves to buy Apple when it's 15, 20% off. Google when it's 15, 20% off. And the higher the beta, the more it's going to fall in price. I have a video on my PayHip page that talks about this, right? But you guys got to start doing the math. You know why? Because the math is not mathing. When you guys come to me, the math is not mathing. Joel, I got $6,000 and I need to make, $7,500 a month. So I'm like, all right, you got 6,000. So you got to make more than 100% return. I'm like, cool. So in my mind, I'm thinking probably going to be trading futures, maybe trading options, and I'm going to buy the S&P. And I'm like, okay, you're going to buy the S&P in options? They're like, no, I'm going to buy the S&P. And I'm like, but the S&P only goes up like 15 or 20% in a year. And that's a good year. And you want to make 110% in a month? The math is not mathing. And then y'all get mad at me. Why are you being so negative, Joel? You telling me I can't make money. I want to make the same amount of money you making. And I'm like, yeah, but the math is not mathing. You got to understand what you're doing. And then you probably got to be an intraday trader to get in and out the market. Yeah, Joel, and I can only look at the market like every 60 days. And I'm like, okay, they don't understand who they are, right? They don't understand what investing and trading or even what asset class that they're trading. All right, so they have to, that's where I come into play. And I use these voices just for entertaining. I don't do this to make anybody feel bad or feel ignorant. But this is what I have to deal with on a daily basis with adults, right? And I'm trying to help you guys understand so that you can make sure that the math, so that make sure that your math is correct. So there are ways to help. And I need to get to you guys' charts. I did say by 1:30, I'm going to be analyzing the first stock. But you can always go to my What Would Joel Do app. In my app, there is an alert service. They do call me Captain Save a Trade. But there is a $50 a month ultimate membership where you also get service and you get access to all of my videos. There's also $50 for one-on-one consultations for 45 minutes. The best kept secret in trading and investing. Anyone that does a one-on-one with me, they're like, oh my God, Joel, I didn't realize that when you said I can ask you anything, that means I can ask you anything. People set up classes, they learn stocks, options, futures, cryptocurrency with me, and they don't have to pay $15,000, $20,000 to learn it. They learn it with me, and they can ask any question that they want, and we're sharing each other's screens. I don't understand why you guys are not taking advantage of this the way that you should, because y'all know I'll be getting ghosts. Sometimes I'll come in, do it for 30 or 60 days, and then I'm gone, probably golfing. All right, so when I have it available to you, try to take advantage of it. All right, if you want to take advantage, if you want to take advantage of those one-on-one consultations with me, and it's not a video of me, it's me. Go to calendly.com/what would Joel do. You literally can book it on your own. If you have to cancel, you can you can cancel it and then you can reschedule all through the app. You don't have to do that with me. But when you're with me, we're going to learn. You can ask me anything and everything about the market, and that's what I allow myself to help you do. All right. Make sure that you guys go to my What Would Joe Do page. People that can't see this live right now, and I do have several people that are on right now. Um, if they can't watch it live, the easiest place to go to where everybody can watch this live is going to be at my What Would Joe Do page. Guys, I'm giving you guys free content. The least you guys can do is go to my What Would Joe Do page, like it, and go to my What Would Joe Do on YouTube and like it. Okay. And I created the Ask Joe GPT for you. Just try it out. If you already have Chat GPT, add me there. If you have any stock questions, if you want a stock to be analyzed, just go ahead, pop a stock in there. It'll ask you what time frame, and it will help you out. If you want your charts to look like mine today, because I have some of the most beautiful, basic, clean charts that are out there, you can always go to my PayHip and download the Thinkorswim chart setup video. And then when you set up your Thinkorswim charts, you can make everything look like mine, and you can use all the indicators that you're going to see today for the next hour and a half. So what are we going to cover today? We're gonna cover, are you a trader or an investor? I think I'm gonna do that in every single solitary live that I do, because it's so important that you know if you're trading or investing. We're gonna simplify your charts. Take all that crap that you've learned off your charts, and we're gonna keep it simple. And we're gonna make more money than anybody has ever helped you make. And y'all gonna start showing them receipts and not worrying about the insecure people in the room that have a problem with you guys' receipts. All right, we're gonna do the math today. So I'm gonna try to look at scenarios. Okay, if we hold this for this, how big would the market cap be? What are we gonna hold it to? Why am I looking at it? And we're gonna use the Thinkorswim platform, which is offered by Charles. I cannot say his name yet. Charles Schwab. I have a problem with that R and L. We're going to use Yahoo Finance. And if, I might use Ask Joe GPT once or twice out there if there's a stock that I've never heard of, which usually doesn't happen unless it's a penny stock. All right, so let's get to business. Let's pull up these charts and let's start analyzing these stocks. All right, so again, this is how your chart should look. This is the SPY. I always start out with the SPY because you should start out with the SPYs. All right. What you guys are looking at right now is a week chart, right? That means every single candle represents a week. Let me take these glasses off, these shades. All right. So what we're looking at here is the spiders. All right. So I always want to know what's going on with the market. As you can see, the market's been going straight up. All right. This is 2023. This is the beginning of the year. If you notice, we've been going straight up for the whole year. I tell people all the time that the third and the fourth year of a president's term is usually a positive year, right? You need to write that down somewhere. So it was very easy to understand that even though we were in a bear market in 2022 and everybody thought that the world was coming to an end and they kept talking about the recession, Joel, it's going to be a recession. And then there's going to be hibernation. And then there's going to be migration. I was like, what are y'all talking about? Like, okay, where's the recession? Even if the recession comes, like, have you looked at charts? Have you looked and see when recessions come, what actually happens? I look outside and people are still buying things. This doesn't really feel like the same recession from 2008, 2009. Joe, you don't know what you're talking about. Recession this and recession that. And I was like, all right. But when I pull up my charts, this is what I see. So a lot of you guys didn't make money because you're so afraid of losing money in the market. And let's be real. Even if you saw the market going up like this, our brains tell us that when it starts to go down, we think something is wrong with the market. If the market is going down, that means something is wrong with it, Joel. And so many of us think we can buy when it gets down here. But when it gets down there, this is how it looks. Are y'all actually buying it right there? No, Most of you guys would have said, I'm going to buy it at least when it gets here or when it gets to a support area, right? But then look at what happens. The market turns around and it starts to go up. How many of you truly would have bought the market right here? I would say 99% of you guys would not have bought the market right there because it doesn't make any sense. Like, why would I buy in the middle? Like, that doesn't make any sense, Joel. I either want to buy it at the lows or it's so low, it's just a steal. Well, that's why you got the same amount of money in your bank account that you had 10 years ago. And you guys know who I'm talking to. And you guys know who you are because you're so negative on the market. You're so negative on the market. You haven't understood the principle that the market is rigged to go up, right? So the market gave you a whole year where the stocks went down in price. All we did was go all the way down to the 200-week moving average. And for 3 weeks, you could have bought the market at the lows. Y'all know when this date was? This was October of 2022. You know what I was doing in October of 2022? I was creating a video where the VIX had went over 30. And I said, hey guys, I'm buying. And not only am I buying, we're at the 200-week moving average. And all I got was crickets. I said, okay, well, I'm used to making money by myself anyway. Let me just go ahead and buy the market. Bought the market up. I said the VIX is over 30. I mean, I do preach you got to buy when it's above 30. You load the boat when it's 50. Only a couple of you guys were like, what's this VIX thing you talking about, Joel? I'm like, it's the thing that they talk about on TV like 27 times a day. But if you don't have your TV on, if you're not listening to actual people that are buying the market and know when to buy, how the heck you gonna know when to buy? Well, I watched this YouTube. Well, how do you know that YouTube individual actually understands the market? Because they can tell you what a candlestick can do. Yeah, and then I paid $15,000. You paid $15,000 to learn what a candlestick is. Guys, I've been there, done that. I can laugh at it because I paid $10,000 too for 4 CDs to teach me options. When Thinkorswim 2 or 3 years later had a free video on their website and taught the same exact stuff. I paid $10,000 a year before. It was free the next year. Why was it free? Because now they have money. They don't have to get over on people like me. We're with TD Ameritrade now. They're footing our bill. And TD Ameritrade wants your funds in the account. So they're going to give you this free information. Y'all know in every single video I would tell y'all, guys, why are y'all paying all these different prices for these classes when you literally can go on TD Ameritrade and learn what futures are, options are for free? And it's better than any teachers that are out there, including myself. No, Joel, I just rather pay. All right, you pay it. Great. But look at what happened. Would you really have bought right here? Why would you buy here? You know why I bought there? Because what I teach is so simple. It's going to make you angry. All you had to do is draw this little line right here. There's one little line. I didn't need 20-something indicators. I just need one little line. Joel, whatever. That one little line doesn't work. Yes, it does. Watch this. I'm going to go all the way back to 2018. I'm going to show you how silly a lot of you guys are. Here's a line right here. Turn green, you make money. Joel, it can't be that easy. It is that easy. Green. Oh, well, it's not green over here. So there's that one little line. Joel, here's that one little line. One little line turns green. Look at how much money you make. Joel, it's not that easy. It is that easy. Now we're in 2000. What? This was 2020. This was COVID. I remember in COVID when I was sitting in my chair and I drew this little line right here. And then right around here, I was like, I'm about to buy it. Not only did I buy down here when the VIX went to 80, I also started buying right around here. And I dang near tripled our accounts. Okay. Joel, it can't be that easy. Yes, it is. This is the 200 week. Draw another little line, another little line, one little line. This one little line I need to charge y'all $10,000 for. Another little line, another little line. And guess what? Okay, if you didn't buy today, are you really going to buy when it breaks this trend line? The answer is you're not. Because if you keep that mindset that the world is coming to an end, you're never going to make money in this game, and it's not going to take care of you. And only the 1 in 10% of people that have been doing it for 10 years is going to keep doing it over and over and over and over and over again until it doesn't work. That was 2018. Y'all want me to go back to 2010? Watch this. I'm gonna scroll all the way back to 2000 and what does it say? 3. You think it doesn't work? This is 2003. Trend line as an investor. Joel, it can't be that easy. Joel, it can't be that easy, brother. That's it. Now it's 2005. Joel, it can't be that easy. Joel, it can't. This is before 2008, 2009 crash. Joel, it can't be this easy. Joel, it can't be this easy. One line. It's like that ninja that has that one little move. He didn't have to hit you with 15, 20 different. And that's how I am now. You know, at my age, if I ever get in a fight, I got 2 moves. I ain't going to tell you what those moves are. I got 2 moves. And if those 2 moves don't work, I'm donezo. But I got 2 moves. I ain't got time to be sitting there and fighting and jabbing and hooking. And I ain't got time for. I got 2 moves to take you out. I only need 1 or 2 moves to make money in this market. Okay. You get close to this 200. Now, I see where you could have lost right here. I think this is probably a significant one right here. This is 2001. Guess this is around the .com crash type area. Okay. That's when it got kind of bad. And this is what a lot of people are afraid of. But even then, you know, the 200 week starts to turn down. And even when the 200 weeks started to turn down, it gave you that one little blip, which was probably about a year. Let's see, that was 2001 till about 2003. That was a pretty long time. And then it was back to business of being easy. Now, you know, market just went up and up and up and up, and you draw this one little line, and when it breaks this line and goes green, it breaks back to the 200. And then, I mean, the rest is history, right? All right, I'm not going to spend too much time on it. It's now 2014, and the market is just climbing and climbing and climbing. There are going to be blips when it happens, okay? But I didn't look and see where the VIX was at that particular time. Maybe the VIX never really climbed and it just slowly bled off. I don't know. I have to go back and look. But for the most part, this is where we are right now, okay? And it always seems impossible because we're already at all-time highs. But you got to understand, if other countries are investing in our country, and if, like, even with the different bills that they have that are out there, if the government is printing money, that's money that's flowing into the market. Yes, and that's what causes inflation. A lot of you guys don't even know why inflation happened in the first place. Inflation happened in the first, and that's why I be laughing at politic-wise, because you got the Democrats arguing with the Republicans about, you know, the Democrats are saying, well, we inherited this from the Republicans, and the Republicans are like, yeah, but it's happening under your watch right now. And it's like, guys, we all know that we had COVID. We all know that there was millions of Americans in other countries where you were sitting at home and not working. So they had to print money and give that money to us so that we could live. That's where the inflation came from. It didn't happen from either party. It happened because of COVID. And I'm like, why are they even arguing this? Because most people want it to be about the other, party. And it's not even about that, right? when you simplify it and you look and see where the basis came from, then you can use that to make money. Well, if they're going to inflate the market with funds, where is that money going to go into? The stock market, right? So, anytime you hear the word inflation, and I talk about this in my stock party videos, anytime you hear the government printing money, you need to start buying the market, because if you don't buy the market or buy asset classes that can inflate when the market does inflate, right? Real estate, 401k, stock market, then you're not going to be able to keep up with the Kardashians or the Harrisons or anybody that's invested in the market. And it's a learning experience for a lot of you guys at this point. All right. So that's the spies. All right. So let's go ahead and start looking at some of you guys' stocks. All right. All right. So Mercedes says, let's look at Google. All right. So let's look at Google. All right. I don't know if it's I don't know if it's a long-term view of it, but if you look and look, if you now watch, it's gonna be like I always tell people this, it's gonna be like a magic show when you watch this. All right. And I don't want you to get angry, but I've been able to analyze these stocks so well and know what to look for. You guys are going to see these same patterns no matter what stock we look at, as long as it's $1 billion or larger. You're going to see stocks hitting this yellow line, which is a 200-week moving average, where a lot of investors know where to buy, or you're going to see a lot of people buying when it touches this 200-day moving average. Okay. You see how we touched this blue line and it was the best buying period for Google? Well, look at what's happening right now. We're approaching the 200-day moving average again. Now, there's going to be two colors that you guys see. You're going to see yellow and you're going to see blue. Yellow is always going to be represented as the 200-week moving average on my charts, which means that every single candle that you're looking at represents a week. Every candle represents 7 days. When you see a blue, when you see this 200-day moving average being blue, that means that you're looking at a day chart where every candle represents a day. Well, what color do you guys see? I mean, unless you're colorblind, this is red. So I understand why a lot of people didn't buy as traders. As a trader, you might want to chill for a minute and say, you know what, Joel, there was a 513 cross. This is a 5-period moving average. This is a 13-period moving average. The 513 cross here, which causes an X. And as you can see, when it crossed, look at that downtrend. Where does it look like it wants to go to? The 200-day moving average. Let me change this to day trading so y'all can't see what's in my kids' accounts. All right. So, this is starting to turn a little blue, but until this starts to turn back up, I tell traders stay away. But investors, if you're investing in this, when can you ever get Google for, see this tool I'm using, for about 15% off? You're looking at this square right there, 15% off. Usually stocks, when they drop 20%, and I teach this in all my videos, it's the perfect time to buy these particular stocks. 20% is what everybody looks at. And if that 20% is near this 200-day moving average, then as an investor, you can go ahead and buy. As a trader, you remember that one little line? I want to wait until we break above this little line, and I want it to go green. I want it to look like this. So traders, I wouldn't buy Google until it looked something like, well, the 200-day was angled down, but it's going to look something like this. It's going to go into the 200-day. It's gonna break this trend, start to go up, but I don't really want to get in until I see these solid blue lines over here. So Joel probably would have got in somewhere around there, which I think I did. And then you would have been able to catch that whole move as long as the 200-day moving average is angled up. All right, let's go to the next stock. Yolanda said, hey guys, happy Friday. Pam says, good afternoon. All right. Let's look at one of my most hated stocks on the freaking planet. All right, CCL. Thundercat said CCL, which is Carnival Cruise. I can't stand this stock. All right, but it doesn't mean that you can't trade it. I hate it as an investment because so many of you guys are like, so many people take cruises, Joel. I was on a cruise the other week. And there were so many people on it, but look at this. Look at this yellow line, guys. This yellow line represents the 200-week moving average. It's telling you the average price of this stock for the past 4 years. The average price of this stock for the last 4 years has been going down for 4 years, been going down after COVID. Well, it's 2024 now. So from COVID till now, the average price has been going down, down, to down, 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 to down, down, down. Now, it is starting to flatten out. Okay. Now, when I see this and I decide that I want to buy something, I'm going to quickly go to Yahoo Finance and I'm going to see how big that particular company is, right? So when I put in Carnival Cruise, I'm going to look up the market cap. So the market cap of Carnival Cruise is about $20 billion in size. So then I say, well, I don't know if that's big or small. All right, let me take this off so that you guys can see the whole chart. All right. So the market cap is $20 billion, right? So I also want to look at other companies like maybe Norwegian. So when I pull up Norwegian cruise lines, I'm like, well, if Carnival Cruise is 20 billion, how much is Norwegian? All right, Norwegian is 7. There's a new one called what's it called? Viking. What about Viking? I don't know if this is the same one though. I think this is a different Viking. All right, but you got Viking that's at 18. So I don't know if that's the same one, but if that's a cruise line company, there is a very high end cruise line that's out right now. I'm thinking that it's Viking, but I'm not sure. So make sure you do your due diligence when you look at that one. So I kind of want to get an idea of how much they are. $20 billion. All right. Not a small cap company, kind of like a mid cap company. So when I pull up Carnival Cruise again, I want to see how much the beta is, right? So when I look at the beta, I'm going to see that the beta is how much this thing moves up or down. The beta for Carnival Cruise is 2.69. Anything higher than 1.5 is crazy. That means traders love to trade this thing. So if I was analyzing the stock again as an investment, maybe you can buy it here, but I still need to know how much I'm going to make, right? So if Carnival Cruise from this date, which is that's 2020. Let's look at it. Yeah, from 2020 until now, it's dropped. You guys can see it's dropped significantly from $50 to $15. So if it took about 3 or 4 years to get here, it's probably going to take 2000 at least a year, even if it starts to move up in price. And if it moves up in price, the stock, just taking this little tool here, even if we go back to 50, it looks like you can make a 300% return. That's why I always tell people it doesn't really pay to be a bear. If I bought this for $50 and it dropped all the way down to where it is right now, do you know I only would have made about a 70% return? And that's if you really, really caught the stock dropping in price. 70% is a lot of money. Don't get me wrong, right? But do y'all know that this move to here was about an 80% drop. But then this move from here to here was a 250% return. Now, y'all see by the eye, you're like, but Joel, isn't this move a lot bigger than this move from here to here? And I'm like, yeah, that's why you guys got to start doing the math, because if you use your ears and your eyes, you're not going to be in the right trades, or you're not going to make the kind of money that you think that you're going to make, especially when you're a bear. It does not pay to be a bear unless you're intraday trading and you're shorting. And I short all the time, guys. I short probably once or twice a day when I'm intraday trading, but I'm buying long and short, and it doesn't really matter. But it does not pay to either sit on the sidelines and just sit back and wait for the VIX to hit 50 every 4 years, or to try to short the market long-term inputs when it pays to be a bull. It does not pay to be a bear. And there's a lot of negative, bearish people that are in the room. And I try to change that mindset because I can't help who you are and how you trade. but the math don't math when you're shorting. It just doesn't. It's rare to get a 70 or 80% move to the downside, but making a 200 or a 300 or a 400% return to the upside is normal in the stock market, especially when you find a company like this that can drop. Okay. So it's very important. All right. Let's look up XOM. All right. XOM on the 1 hour. Great. So XOM is Exxon, guys. So if you're trading oil and you want to trade the largest oil companies that are out there, then, trading Exxon is going to be better for you. I'm just making sure. Oh, you meant Crown Castle? I'm just seeing that message. So I'll look up Crown Castle in a second. Good thing I looked at the bottom. All right. So, oh, and you know what? That's just because I can't see. I see now that that's an eye. I should have my glasses on, but I'm trying to be cool. All right. But XOM is an oil company. 200-week moving averages angled up. This individual wanted to look at it on an hour chart. So I immediately noted this is a trader, guys. This is somebody who does not care about what this stock is going to do a month from now. This is usually a 1-day trade. Sometimes you can use an hour, even intraday. But in my opinion, if you're going to trade intraday and you're going to get in and out the same day, you need to use a chart that's 15 minutes or less. And the reason for that is because the market really only trends 30 minutes a day. Okay. It really only trends 30 minutes a day. So if I'm looking at a hour chart or a 30-minute chart or anything higher than 15 minutes, you didn't miss the trend. Like the market, like if y'all ever watched the market from 9:45 to like 10:15, the market moved. If you ever watched it from like 2 o'clock to 3 o'clock, the market really moves. If I'm looking at a longer time frame, I'm gonna miss intraday trading. Now, it doesn't mean that I can't make money holding it for the next 2 or 3 days or next 7 days. That's why it's so important that once you realize the type of trader you are, that you match the chart with your strategy. When I hear 1 hour, I immediately say to myself, ooh, I can maybe take a longer trade for the day, or I'm holding this overnight. Probably don't want to be in this trade longer than 14 days, which is perfect because the market trends 7 to 14 days. This is my mindset, right? So before I even start trading, I let the market tell me what to do. So I'm going to throw on my hour chart. My hour chart is telling me that you're dealing with a bullish stock because the stock right now has a 200-day moving average that's angled up. Okay. Now, the hour right now looks like we got a 513 cross, and it looks like the 513 cross is to the downside. So, in my opinion, Joel Harrison would have been shorting this stock sometime right around, well, that's 5 o'clock, 8 o'clock. I gotta move this StreamYard thing so I can see the charts. Hold on. Ah, cool. I can move this up here. All right. So this is 7, 8. This is 9 o'clock, and it looks like we were going sideways. Now, here's the thing also that a lot of you guys don't do. Do you guys know how to find out if a stock is on sale for the day? A lot of you guys don't know that you can look at I'm going to take this off, Pam. You guys don't know that you can look at the ATR. So the ATR tells me how much a stock moves in a daily basis from the lows to the highs or the highs to the lows. So if I was looking at XOM, which why isn't it? Why isn't it here? Hold on. There we go. XOM moves about $2 a day. All right. So if I go early in the morning and I see the XOM early 12 o'clock a.m. and it was sitting at about 118, that means, if it gets around 116.75, I'm doing the math. If it drops about $2, it's probably, the end of this move. Well, it ran from 118.75 till about 117.60. So XOM still can move another dollar to the downside before it runs out of steam. Okay. So if I was looking at this, I would say, hey, it looks short. We're underneath the Ichimoku. If I was to short this, there looks like there might be another dollar that can be made to the downside, right? But this might be something that I hold 7 to 14 days or even a day. If I was holding it for the night, and you were able to catch it somewhere up here, it might, I would have my stop sitting at 118.40 right about now for when it pulled back and it's starting to come back down. All right. And I don't need any other chart to tell me any of this. And when I pull up XOM, even though it's short-term bearish, you can also see where it came from. It shot up really, really hard. It gave you 1, 2, 3 times to break above this resistance, and it didn't do it. So once it broke below here, Joel would probably be a shorting man in this particular trade. All right. So yeah, I would probably take a short on this trade. And seeing that it came from this particular area, you probably want to watch it. All right. But you are dealing with a bullish stock. I hate shorting bullish stocks. I love shorting bearish companies. Like I would love to short something like a Carnival Cruise, right? Because you see on another chart, the stock looks really, really bullish. Okay. And it's sitting in this little channel. So it can easily come out of this channel, come back down here, and then turn back up and still remain bullish. All right. So just be careful when you're looking at something like an XOM. Let's go back and look at CCI. All right. Crown Castle. Crown Castle was a bearish company up until just recently. Y'all see how I was able to say that information within 5 to 10 seconds? What was, Joel, how did you know that? What were you looking at? Because I know this because I've been watching it for a year. Well, the stock was going down in price. Stock was going down in price. The 200-day was down. Y'all, literally, watch this. As soon as the 200-day started to turn down, y'all should have said, I'm not going to buy this to the upside. I'm only taking shorts. Okay. If I was looking at it on a week chart, even the week chart is angled down. This is a double negative. I ain't doing nothing with this company but short term and long term. But can this be the time that it turns around? Yeah, but I don't really like taking those chances. Like bearish companies that are going down in price, like they tend to keep going down. If you had just looked and saw that the 200 week was moving down, any chance that the 200-day was going down, hedge funds, pension funds are going to sell this to the ground. And that's what they did. They sold it while the market was going straight up in value. This stock was going down in value from 188 all the way down to 104. Now, is that on sale? I don't know, because it depends on if the billionaires want to buy it again in the future. Okay. It did hit a low support area. How do I know what that support area is? Well, playing Monday morning quarterback, you just go over here and you see that was a support area from January of 2016. All right. It went back to a price that it was from 2016. That for 8 years, this company has not made anybody any money. Why am I going to buy something like this? And believe me, when you guys put these charts up here, I'm going to talk about it if it's bearish. It's not about the person. You don't know what that person wants to do with it. They might want to buy it. They might want to short it. They might have been in it. It might be a small position and they decide that they want to hold it. I have a bunch of terrible companies in my portfolio that I'm just sitting on, but it's such a small amount that it doesn't matter. All right. And I'm just waiting for it to pop so I can add to it. But you are getting some movement to the upside. Now, if we get this movement to the upside, the very first place I'm looking at is this 146 area. because that's a resistance area. If I was looking at the 200-day moving average, there was some good signs right here. This was February. Oh no, this was really need to put on my glasses. This was July the 10th. July the 10th, the 200-day moving average started to hang up. If you were using the what would Joel do method, you would have drawn this one little line. There's one little line right here. And then once it broke through that one little line, you see a 513 cross. You see it go blue here, green there, and it's blue down here. That's a go, at least to the 200-day moving average. And then it kept moving even higher. Okay. So right now we have a downtrend. Let's say you're in this stock. Well, Joe, how do I know when to get out? Well, if you got in somewhere down here and it ran all the way up here, what is this matching? This is matching this over here. Bam. Y'all see that? It's like putting a puzzle together. That's why I never really liked my English classes. I even got in a fight with my English teacher. I wrote a poem, and the teacher had the nerve to tell me that my poem wasn't good because I guess she didn't like it. But other people in the class liked my poem. It rhymed, it was funny, but it didn't fit that teacher's and how she felt, right? I love things that's exact, numbers, math, right? You can't tell me 1 + 1 is not equal to 2 unless we're in some other metaverse, right? So I never really favored classes where, depending on the person that's teaching it, I had to cater to what they like to get an A or a B. And I have nothing against you linguists that are out there, but I just never favored those classes for that reason. But look, you got a resistance area right here. And look, it's coming down in price. And if it breaks this resistance, it has to go green on a TTM squeeze, or it has to go green on the MACD histogram or the stochastics or whatever you're using on the lower part of your chart in order for me to get in. I know people want to be the ones that buy it right here. They want to be the one that gets that reversal. That's not how the stock market works. You're not reversing anything. You don't have the type of money to reverse the market. Wait, because you don't know what happened that day. You don't know what catalyst. The CEO could have named a new CEO that day. Okay. And a lot of you guys are buying and timing these things and thinking that that's the strategy that's going to work in the future. And then when you try that same strategy, you get your butt kicked. Stop trying to reverse the market with these reversal tools. They don't work because the market fundamentally turns around when the people out there throw money into it. That's how this stock can turn around. It has nothing to do with these indicators unless it's an area of support or a 200-day moving average. But when you see it just turn around in midair, it's usually something that you have no control of. But it doesn't mean that you can't ride it. We always think that when a move happens, that it's over. Well, Joel, the event, the VIX event happened on Monday. I guess I gotta wait 4 more years. No, you don't. Wait until the market drops again, and any sign of it going up again. Remember, draw that one little line, draw the one little line, and when it breaks above that line and it goes green, then take a shot at it. But it depends on what your strategy is. If it's investing, everybody should have. It's interesting to me, all these investors that are in a room and nobody bought anything this whole week. It's so interesting to me because when you look at everything, when you look at even the top stocks like Google at the 200-day moving average, Apple got close to the 200-day, right? Look how close it got to it. And then now it's breaking out again. Okay. All right. A lot of these stocks that are huge that everybody have been wanting to buy. Look at Nvidia. It didn't even give you a chance to get to the 200-day. And that's what great stocks do. They'll do this on purpose because what they're trying to do is catch these short sellers who hate the market and squeeze them out of control and squeeze them back to the highs. Okay. All right. Let's look at another one. All right. I'm going to try to get through you guys' stocks. We have, what's up, Mike? Hope you still on. All right. Great. Same pattern. Same pattern. Joel, it's not that easy. Joel, I can't believe you only got like 2 indicators on your chart. My teacher has never shown me anything this easy. It's so complicated. I got to study for like 75 hours and pick the right moment. Then I'm at work and I miss it and I just can't see it. And then they tell me to just keep reading and keep studying and keep paying this money. You're getting duped. 200-day. Joel comes in. Joel just comes in, buys it. When it hits the 200-day moving average, then show his receipt in the room. And then and then people say, well, why you didn't tell nobody when you bought it? Well, hold up. I'm showing you a receipt, and now I'm getting flack on not coming to your house and knocking on your door and showing you me hit the buy button. Y'all are funny. And it's funny to me. Like everything in life is funny to me. Y'all be thinking I be getting offended by stuff. It's only a couple of things that can offend me. As I get older, like I really care less. I could really care less about a lot of stuff. I feel comfortable in my skin. I felt like I've accomplished 95% of the goals in my life. All my life now is about traveling, investing, trading, and golf and visiting my sons. That's literally what my life is about. Right. So nothing really offends me. Everything is funny. When y'all talk about me, when you mock me, when you make fun of me, I laugh at myself. It's funny. Like some of you guys take things too seriously. Like we're here to make money, right? I'm here to make money. If you have a strategy that makes money, I want to see it. But bashing these other people for showing certain things is just ridiculous to me. Like let people have their fun, let people have their day. You don't know what they going through in life. You don't know what they did to get to that point. Like I understand when I see people in the end zone and dancing. You didn't go to the gym with them and work out with them for 40 hours. You weren't with them when they were rehabilitating their torn Achilles or their torn whatever. As an athlete, I understand that. As a golfer, I'm like, yo, when I have a great round and I post it and people are like, yeah, 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 why you showing off you being here, there, and the other? I'm like, yo, you don't know the amount of hours I put in to be able to hit this ball 2 inches from the hole. Other athletes get it. When I put out a receipt, you don't know the 25 and 30,000 hours I put into the market so that I can see it as clear as I see it right now. It's the people that don't do it, that don't care, that be like, this person this, and you're this, and you're that, and then trying to judge me on who I am. Like, for real? Like, that's where we at? Y'all gonna come into my room that's free. I'm giving y'all all this free information, gems, telling y'all when to buy, when not to buy, and then y'all got something negative to say? And then I laugh at it. This person is funny to me. Like it really is funny to me. But anyway, that's my rant for the day. Let's look at AMAT. Applied materials. All right, so applied materials. Joel buys it right here, shows his receipt. Mike shows his receipts. Everybody get mad. And look, we're hitting it again. Hit the 200-day. Mike probably bought it there when the VIX hit 50 and hit the 200-day moving average. And now Mike is probably up 21% in what, like 14 days. How many of you guys have had a 21% return in a stock in 14 days? This is how easy it is if you know what to look for. But see, Mike, and I know how much Mike Mike got, right? Mike, one of them cats that ain't gonna show you his receipts because he'd be like, man, if somebody if somebody say anything negative to me, it's gonna be on. So they let me do all the talking. All right. Sorry, I put your business out there, Mike. Nice guy. How them Falcons gonna do this year, man? All right. We have L Light says, I have my 513 cross on Apple swing trade for 10 days. Is my TTM squeeze telling me now is not the time? All right, cool. So let's look at Apple. So so using the what would Joel do method, we're going to put the hour, what was it, the hour chart? I have my 513. Oh, okay. We're going to use a day chart and we're going to clean this up some. So let's go ahead and clean that up looking at Apple. So what this individual is saying is that, look, there was a 513 cross right here. All right. This is what we call the what would Joel do method, right? Here's a cross right here. Stock dropped in price. VIX hit 50. Apple hit its cross here, and it's going blue on the TTM squeeze. I'm going to hide this so that you guys can see it. All right. You see how it's blue down here? All right. This is what I teach. Right? If you were to just draw that one little line, y'all refuse to learn. You broke that trend. You got a 513 cross. It started to go green. This is blue. This is a perfect entry for Apple. Okay. Now, what I don't like about it is that you're expecting Apple to literally go back to its all-time highs. I really don't like trading into all-time highs. I love buying it when it's 20% off. Let's see how much it's off right here. Apple is only off about from what, 225? It's only down from the highs 5%. As a trade, yes. Remember, as a trade, I got to stop thinking as an investor. I kind of like it to, I want it to have like that 10, 15% cross start to come up because it's only 5% away from all-time highs. Now, this could be the start of Apple going from 225 to, 300, but this individual said for a 10-day trade. Now, the only thing that I don't like about this, all right, I like it and I don't like it. Apple did start to move up right here. When the VIX hit 50, even though the cross happened way here and the rule of thumb is to count, you want to be in that trade within 5 days and that it usually trends for 7 to 10 days. Apple actually has been trending up for 1 day, 2 days, 3 days, 4 days, 5, 6, 7, 8, 9. This is literally the 9th day into an upwards trend for Apple. So if you're in it, be careful. Okay. Be extremely careful because you're already in that 9 or 10-day movement. Normally, when you see a move like that and you see a 513 cross, you usually see it turn green a lot faster. Okay. Trying to see like when it's like you see how when it crossed right here, even though it crossed here, this is just day 2 of this trend, 1 and 2. Usually don't get 6 or 7 days and then it starts to turn green. Even here, when it hit the 200 day, when it crossed, it only was about 5 or 6 days into that trend. So you still could try to ride it out 4 or 5. This one, it ran so hard from the lows that this 513, I would make it's probably a 50-50 chance that this might turn around, especially since we hit this resistance level. It depends on what's happening on Monday. All right, cool. That's a good one though. All right, let's look at Palantir. Could you evaluate Palantir? Palantir is one of my favorite, favorite, favorite companies. That's also on my, it's in my core 30 list of stocks that I'm holding as an investment. And it's because they're information, information is gold. And they also are involved in AI. So if you didn't, this is a great chance to even ask Joel, what is Palantir? So I'm going to go here. What is Palantir? To give you a good explanation, Palantir Technologies is a public American software company that specializes in big data analytics, founded in 2003 by Peter Neal, all right, and Stephen Cohen. All right, the key products is the Palantir Gotham. So the government does have a contract with Palantir. So as long as they getting that government money, that stock is going to continue to go up in price. All right. So I really love the software company, and I'm really not too big into software companies like Salesforce, but I really like this company because of how small it is in comparison to everything else. The company is only a 70 billion is large, but it's not large in comparison to what what these companies are getting, especially when they have these big contracts with like the government and some of these bigger companies. And they're only gonna keep getting more and more companies as AI starts to grow and grow and grow. If you look at the and it just I don't, the 5 year chart does show that, back in 2021, it did drop from $35 all the way down to 7. All right, which kind of sucked. And then all of a sudden it started to run. And now we're sitting at about $32 and we're really, really close to its all-time highs. So I'm in Palantir. I'm gonna hold it. I know once it gets to its all-time highs, um, if we were looking at a week chart, oh, it looks like it's hold on. If we can get back to its no, that's Apple. I was about to say this does not look like Palantir. Here we go. $45 looks like the all-time highs, but as you can see, it's forming a nice little bowl. Like you see how it's rounding out? I call that a rounded bottom. Well, I don't call it. This is called a rounded bottom. Okay. And when it rounds out like that, it's like a cup and handle, and it should go up higher. All right. So I'm going to keep holding it. Maybe even if it gets to 45, it's going to chill for a second. Once it gets there, maybe go sideways, wait for another catalyst to send it higher. All right. It's a good one, though. All right. So happy Friday from Latanya or Latiana Townsend. Rich said, I'm switching to Thinkorswim apparently. Yeah, because if Thinkorswim has the TTM trend, the TTM squeeze. You can also find those same indicators on TradeView or TradeStation. I don't use TradeStation, but I know a lot of other people that use it and they love it. And there's only a couple of places that you're going to find the indicators that I'm using. You don't necessarily have to use. I even tell people just throw $100 in Charles Schwab, have access to the Thinkorswim tools, and then you have access to the alert service. You have access to all these different things that other platforms don't have. All right, so Arjuna said, greetings. Anyone can guide me on what computers and screens to purchase to get my setup started. All right, so a lot of you guys help him out in the comment section, but I'm going to always tell you to buy Apple products because I've had every single Apple product except for one desktop that I've owned. I've had forever. They don't break. Anytime I buy any other type of laptop from any other company, they break within 6 months, 12 months, 2 months, and I have to replace them. I've never had to replace any of my Apple products. I still have an iPod Touch that I got like 15 something years ago that still works to this day, and an iPod Shuffle. Really, really good products. I know a lot of people hate when people, y'all are funny, man. Like when companies are at the top, y'all just immediately don't like them just because they're number one. Yeah, they're number one, especially like your IT guys out there. They can't stand Apple and be working for Apple. Like I don't get it. It's so funny to me. It's just hilarious to me. Anyway, FOMO from the 50 VIX is real. Hey, for real. So FOMO stands for the fear of missing out. The fear of missing out. All right. So when the VIX hit 50, the market started to run. So I would say yes and no, because you got to understand it is the fear of missing out, but it's also hedge funds and pension funds that pulled their money and they have to put those funds back to work. After about 7 days, they're like, look, this money is sitting in a money market account. When our clients call us, they're going to ask us what we're invested in and what we bought. And if we can't tell them that we bought these stocks, they're going to take their funds out of our firm and put it somewhere else. So yes, it's the fear of missing out, but it's also big companies putting their money back to work. and people like myself that had money on the sideline, we're all like all 100% invested now. So now the market probably will turn around. Now, one thing that I can assure you of, and if you're not invested in the market because you don't know where we don't know who's going to be in office in November, I understand that totally. All right. Anytime there's any uncertainty in the market, I want you guys to be careful. Now, if you're a long time investor, I don't want you guys just pulling your funds just because the market goes down or you see something on your chart. The only time I think you should pull your money out of any company, and listen to what I'm saying because I don't want you to confuse it. There is a 200-day moving average, and then there's a 200-week moving average. When that 200-week moving average starts to angle down, you should be pulling your funds out of that company because that company might go down for the next 3 or 4 years. Because remember, that's the average price of that stock for the last 4 years. Once the average price starts to come down, believe me, other people that pay people like myself to analyze these stocks using these technicals are going to go and tell the big boss, hey, the 200 week just started moving down. Let's take these funds out because there's something wrong with this company, and let's throw it in some other company that's either similar to it or something that we've been looking at. All right. Unless they're best friends with the CEO, there's no love or loss in taking their money out. All right. So that's the only time I would pull my funds if I'm in an investment. Otherwise, if I'm in an investment and I love the company, y'all should be buying more, even if it's a higher price than you guys bought before. All right. Cool. Shanika Jackson said, hello, everybody. Happy Friday. She also says she's keeping cash on the sidelines, and that's fine. Like, I'm not going to beat up anybody if their money is sitting on the sidelines. Now, after November 4th, if your money is still sitting on the sidelines and the market doesn't look like it's going to turn around, then that's on you because the market usually, we usually get a Christmas rally at the end of the year. I talk about it all the time. I think out of all the years that we've been trading, there's only been like one or two October, November, December's where the market didn't skyrocket in price. And this is just a gem that a lot of you guys don't know, but crypto usually moves really hard right after Thanksgiving. Okay, so keep that in mind. All right, trying to get all you guys' questions. All right, the trick is to buy in small chunks on a. All right, so he's explaining how to buy as an investor. All right. He says that the trick in buying is that when a stock is down 5%, down by 25%, I think I understand it. But basically, as it starts to go down, if it goes down 5%, you buy about 25% of your account. I think that's what he's saying. If it's down another 10%, you buy another 25%. So let's say you got $1,000 and the market drops 5%. If you want to take part in it, instead of using all of your $1,000 when it's down 5%, just throw 250 in it and then let it come in another 2%, 10%, and then throw another 250 in it. All right. So you buy it in stages. You never buy everything at one time. You always buy it in stages. All right. And that's how you're able to put your toe in the water and kind of, edge your way into the market instead of throwing all of it in at one time. My wife does this all the time, and she's like all or nothing, like all the time. Just put all the money in crypto, Joel. And I'm like, no, we're not going to do that. All right, we're going to spread it out. We're going to allot this percent of our account in this, and we're going to buy it in stages. All right, so it's just funny how a lot of us, the way that we want to go is to go all in because we feel like, hey, Joel, when I do anything and everything in life, I jump with 2 feet in all the time, and I'm like, that's great, but there's still a way to do it. Just because you want to jump in the water, there is a correct way of jumping in the water. All right. And I want you guys to keep that in mind as well. So that's pretty cool. All right. Taylor J said 10,000. Oh, I must have been talking about 10,000 earlier. Oh, you can't see the bottom of the indicator. Okay, so yeah, I'll slide it out of the way every time we look at a new stock. All right, SMCI. Oh my God, a lot of you guys been talking about SMCI. This is super micro computers. All right, super micro computers. A lot of people were buying it because they were attached to Nvidia. All right. Small cap company that can grow in value. So this is the prime example of buying a company that is feeding off of another frenzy. So everybody was so into Nvidia. So I'm gonna look at Nvidia first before we look at Supermicro. So if you notice, Nvidia ran straight up, right? If you were in Nvidia, I've been talking about Nvidia since 2016. Y'all want to jump on the bandwagon this year. I got people talking about, I know I was telling everybody to buy it back in early this year. And I was like, I've been talking about it since 2016, right? I'm up 2000 and some percent. There's only about 4 or 5 of us in the room that are up over 2000%. All right. Where were those? When were you talking about those, Joel? Back in 2016. Where were you? Where were you guys? All right. Nvidia. We love Nvidia because Nvidia basically has a monopoly. They're involved in anything technology. I don't care what it is. At one point, they were Nvidia chips were the most used in mining for crypto, gaming. It was the best chips to have if you're into gaming. Um, you know, the metaverse, because the chips were so fast. That's the only way that the metaverse can even work. So you got Facebook heavily investing in Nvidia. Now that you have Chat GPT, you need to have all of this information processed and moved as quickly as possible. You got computers that are actually learning on its own. Guys, Chat GPT is so freaking amazing. Like I said, the characters and the cartoons I did today in my presentation, I think I did those cartoons in like 5 or 10 seconds. I just said, hey, I need this picture of Joel and I need it to look kind of like Einstein. And it just created it in like 5 or 10 seconds. Like, it's so amazing what you can do with it. You can literally ask it any and everything. You can ask it to create any type of picture you want. You literally can ask it for how to make certain things. So if you're cooking, if you're cooking, I don't know, chicken, and you run out of something, it'll tell you what you can use as an alternative. Like, it's crazy. But you need chips to be able to run, you need chips to be able to run AI, and AI is about to be so huge. Driverless vehicles, although y'all hate electric vehicles and this, that, and the other, it's coming, and it's going to come fast. And before you know it, you will be taking an Uber and a driverless vehicle. Well, they're run on these types of chips. All right. So Nvidia ran in price. AI ran to the moon, ran from $20 all the way to 140. And that's after the stock split. So it still ran 7 times its value, whatever the price was at that particular time. So if you weren't able to catch something like an Nvidia, and it looked like it came in a little bit, here's a tool that a lot of you guys don't use that you should be using, the Fibonacci retracement tool. These stocks are going to retrace about 50% of its move. So it was, I thought that it was going to come in to about $76. Okay. I did buy some more right around $92 in another account. I remember posting that in the room also in one of my IRAs, my smaller accounts. I think I threw 25,000 at it. And I mean, it's up pretty good right now. Like, even with that $25,000 account, I'm up what, 35% in like, what, 7 days? That's crazy, right? That's crazy. And it was very easy. The VIX hit 50. I had some money sitting over here in this SEP IRA that I wasn't using. I threw that money at it as well. All right. And now I can sit on it. I could put my stop at 92 and I don't lose. All right. But at the same time, I'm still trading and investing in all these other particular accounts. And I think you guys should set yourself up the same way. But let's look at SMCI. So if you couldn't catch Nvidia, which is a $3 or $4 trillion company, you could try to catch something like a SMCI. So when Nvidia was running, people took a shot at SMCI, even though it was a $400 stock. It ran from $400 to $1,200, which was a 200% return. And now SMCI is coming in. Well, what are the charts telling you? If this is red, and it's been red for 4 weeks, if this is red for 4 weeks and this is red, then I kind of want to stay away. Y'all see how I have an alert down here? Let me move this out the way so that you guys can see it. All right. So, it could come in down here to this 200-week moving average. All right. But like I said, if you were to use the Fibonacci tool, even from the 200-week, all it did was come in 50%. Everybody should have known that SMCI at some point was going to come back 50% because that's what stocks do. I don't care if you watch any trend of this stock moving up, even when it moved from here to here, it's going to come in about 25 to 50% before it starts to go higher. Well, this was a bigger move, so it's going to come in 25 or 50% of the move. And maybe it comes down all the way to 75%. But for now, SMCI looks bearish. And I'm going to tell you why, right? Imagine you got $100,000 sitting in your account. And you're like, all right, I can buy SMCI. And if I buy it right here, right now at 625, and it goes back to its highs, I'm going to make 100% return. Okay. If it goes back to its highs, maybe even higher, I'm going to make 100% return. Now, you got $100,000 in your account, or you're a manager that's managing $1 billion. And then you go and you look at something like Nvidia, and you say, well, I can make 100% return there with a company that really nobody really knows about, or I could buy Nvidia again. Let's say you bought it at these lows. And if it goes back to its all-time highs, I make a 50% return. So I can either go with a small cap company that may go lower and make 100% return, or I can buy the third largest company on the planet and make a 50% return. 9 out of 10 times, the fund manager is going to choose Nvidia, because even though that 50% is huge, 50% is still ridiculous. So if I'm going to be speculative, I'm going to be speculative with something that I know everybody else is going to buy. Because remember, Nvidia is the reason why SMCI was moving in the first place. All right. So as long as Nvidia is doing well, SMCI should do well, but Nvidia is not sitting at all-time highs. If Nvidia was already at its all-time highs, then I would say, all right, go buy your AMDs, go buy your SMCIs, go buy your Microns, go buy your Broadcoms, right? But it's not. It still has room to run. So until Nvidia gets back in favor, you're going to see stocks like SMCI sell off. Not only are you going to see it sell off, you might even see people pull their money out of SMCI and say, I know I can get another 100%, but I'd rather get 50% back and throw their money in Nvidia. I see a lot of people that are doing it. Not to scare anybody out of it, right? I really am giving you the negative of it. But let's see what's happening on the day chart. Now, on the day chart, short term, I was looking at it as an investor. As a trader that's looking for a 7 or 14-day move, what's happening as we speak? We're getting a 513 cross. This is literally day one. Okay. So maybe on Monday, we're sitting at 684. Okay. If this thing starts to move. So the short-term move of SMCI looks good, but that's only 7 to 14 days. And I'm looking at a day chart to do this. You can actually look at anywhere from a 1 hour, a 4 hour, or a day chart and probably see this same move. Even if we looked at a 1 hour chart, it should be showing you the same thing. You see, we're above the Ichimoku. We are starting to go up in value. Okay. Even though it's kind of went down today. But you see right here, yesterday looks like when you should have probably been buying the stock to the upside. But on the day, if you want it to be super duper early, but this chart looks bullish. The day chart looks bullish, but this is only 7 to 14 days, probably to this 200-day moving average. And then we got to wait and see what's happening at that point. But if I was thinking like 6 months to 12 months, the charts are not looking that good. It still looks bearish. It's still not out of the woods. It still has to break this trend line. All right, cool. That's a good one. All right, how about KGS weekly? All right. I don't know if you want to look at a weekly chart or if you want to look at it for a week trade, but I'll look at both of them. All right. So let's look at KGS. So KGS is Kodiak Gas, which you got me on that one. So I want to make sure that this is a stock that has, anytime I don't know anything about a stock, and I'm going to be, I don't know anything about this one. And I can be honest. I want to look at the market cap. And it just met the criteria. So it's a $2 billion stock. So I love $2 billion stock companies, but I hate to trade them. I only like buying companies this small if I'm investing in it, because if it's a $1 billion company, if it goes from 1 billion to 2 billion, I can make 100% return. All right. But let's look at it as a trade. All right. Or let's look at it on the weekly chart. Now, look, this bad boy has a 6% dividend. That is absolutely ridiculously high. That's great. And looking at the 5-year chart, normally when you see a dividend that high, you never see a chart that looks this bullish. It's always bearish. So this is a great, fundamentally good company to hold, especially when you're sitting on 10, 15, 20 million dollars. And you're like, yo, I just need to get, I just need $1 million off of that joint or 500,000 off that mug every year with my 10 mil and not have to worry about the stock dropping in price that much, and you still get that dividend check. This is one of those companies that you would buy once you start looking for dividends. You can always find dividends fairly quickly when you're looking at Yahoo Finance. And I keep forgetting to take this off so that you guys can see it. So the dividend is right here. It says 6% dividend. This is a 5-year chart. But let's look at it on a longer time frame. So if I was looking at this with the week chart, as you can see, this stock looks very, 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 very bullish. Now, it's been going sideways ever since July. Yep, July. So, the stock has been ranging in between this price and this price. So it did come in at some point at 25, but it's ranging between 25 and 30, and it's giving you a 6% dividend. It's also forming a cup and handle pattern, which means that if this thing breaks out, not only are you going to get that 6% dividend, but you're going to get the appreciation of the stock as well. So this is a very, 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 very good, fundamentally good company, and it has a very, very good fundamentally good chart. All right, if I was looking at it on the 200-day, as you can see, it's also the same. And you see that the 200-day moving average is angled up. It does have some short-term bearishness. Okay, short-term bearishness. So if I was shorting it for the next 7 to 14 days, you see how the day chart shows you something different from the week chart. That's why, guys, you can't look at a week chart and a day chart and then a month chart and then a year chart and then expect to try, and then an hour chart, and then try to take a trade from it. You get on information overload. You have to literally ask yourself, what do I want to do with this? As an investment, I want to make a 6% dividend on a very solid company. But as a trade, and I always advise people never trade stocks with high dividends. It's not worth it. And if you're trading it in options, sometimes you have to pay that dividend. All right, depending on how long you go out. And a lot of you guys don't know that until you've been holding it for 8 months and then you realize why you can lose more than you actually have in your account. The options players don't be telling you that. All right. So try to stay away from these companies with options longer term, especially if you don't want to pay that dividend. All right. Let's look at another one. I don't get this joke, but I think a lot of you guys will. Terrence Howard. What movie was it? The Best Man? I'm trying to go back to what I said. I'm sorry. I know I'm not going as fast as I should be going. Oh, great. That's great positive reinforcement. Thank you, Yolanda. All right, Z scalar. I always get I get Z scale. What's interesting to me is a lot of you guys don't know what Z scalar is, but I get it like every single time I do a live. All right, so let's look at Z scalar. So for you guys that don't know what Z scalar is, we're going to use Ask Joel GPT. What is Z scalar? Oh God, look at my spelling. Zscaler is a cloud security company like your Salesforce. Okay. All right. So let's go look at the charts. I usually just go with Salesforce. Remember, I kind of am trying to stay away from cloud service companies because of AI. That's why I like Palantir a lot more. But if you're investing in this, 200-day moving averages angled up, that's good. 200-week moving averages angled up, that's good. We're at the 200-week, we're at the 200-day. This is when you're supposed to be buying this long term. As a trader, you're also supposed to be buying it. Look at there. You draw your little line, you draw your little line, you break your little line, and look at what's happening, guys. It's going up in price. I told you guys you're going to see these same patterns on every single solitary stock we look at today. Every single solitary stock is like magic. And then you wonder why I always come in the room and say investing and trading it's easy. It is. Y'all are making it too complicated. These guys that are handling these funds, they're smart. I always say they're not that smart. They're not that great at analyzing this stuff this fast like we do it. All right. They place money in fundamentally good companies and they just do it over time and they know that it's going to go up in value. When you're trying to make money in 10 or 14 days, you have to be a little bit more savvy in the way that you look at the market. All right. But look, it's starting to explode in price. It looks like we're going to the 200-day. If you were trading this, I probably would have been in yesterday, would have been up today. Because today is a Friday, even if I was looking for a 7 to 14-day move, I would probably be out of it unless I was up over 100% in my options account. And I usually buy more than one options contract. So I'll sell half my contracts and let the other half run. All right. But very good company. Looks pretty cool. He said he loves the legendary Joel rants. I try to keep them to a minimum. I know I do the rants to kind of keep you guys, this stuff can get really, really boring. So I try to keep you guys entertained. All right. All right. Can you analyze CrowdStrike long-term investment? All right. So unless you've been under a rock, CrowdStrike is supposedly the best cybersecurity company on the planet, although it's not the largest. The largest is going to be Palo Alto. CrowdStrike is number 2, and it's the best company that deals with cybersecurity on the planet. But as you guys know, about 3 weeks ago, me and my family were taking a trip to Canada from Atlanta, and CrowdStrike had an update on their I guess their program or they had a software update, and it literally shut down like hundreds of companies, airlines being one of them. So all of these flights were being canceled. And now Delta is suing CrowdStrike for about I think, a $500 million to $1 billion because of all the flights that they had to cancel. And if you did use Delta, and we're trying to take part in it, Delta has this thing where if you can show the receipts from any inconvenience you had, they're going to try to reimburse you those funds, right? So they're in a pickle right now, and CrowdStrike is saying, look, you knew what you were dealing with when you hired us, and this is one of the things. So, you know, your suit is not going to stick. So that's what a lot of people are, including myself. I sold, and I'm asking questions later, but I love CrowdStrike. In all of my posts that I did in the room, and you can always go to the search tab, type CrowdStrike, and you can see any post that I had where I was talking about this company. I love this company, but personally, I'm pissed off with them because I had to drive for 12 hours all the way to Canada and back, and I missed a day in Niagara Falls. So I'm kind of pissed at them for that. But stuff happens, and we still had a great time. Anyway, but CrowdStrike's 200-day moving average still looks good. Look at this. If I had just put my little line, if I had just put my little line right here, and we broke that little line, and this started to go bullish, even this day when the VIX hit 50, it looks like we had a short-term bottom, and this stock has been running for the last 7 days. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row, straight up in price. And it looks like it still wants to go all the way to 295, and the stock is down 35%. So even if you were to buy this stock from here back to its highs, that's a 56% return if it can get back to its highs. Now, do I think it can, when I look at the lower, when I look down low, even if this started to move right now, it might take 30, 60, 90 days for it to happen. But me personally, I'm going to stay out of this company for at least 2 quarters before I decide what I'm going to do next with them. Good company, though. He said, "Is that how we sound?" Yes, that's how y'all sound when y'all be crying. Joe, market selling on a recession, a depression, migration, all the Asians. Y'all be killing me. Just buy something. If the world's coming to an end, buy something. All right, SOXL. Let's check it out. SOXL. All right, semiconductor. So this is a triple. So if you're into ETFs, what an ETF is, it's an exchange traded fund. An exchange traded fund is a fund that basically, instead of buying individual stocks, you can buy a basket of stocks, like the S&P 500. You can buy the SPY. It's literally buying the 500 largest companies out there. But then you have ETFs and indexes that move faster than the normal index. So if you bought the SMH, which is the semiconductor ETF, it might only be up or down, 1 or 2% today, right? But when you buy the triple ETF, it's going to move 2 or 3 times that amount. So if you really believe in stocks going up in value, what a lot of people will do is they won't buy Nvidia because they're afraid of having all that access to that one company. So they'll say, all right, I'll buy an index. So if the index is going up or down, at least I know that the index is not going to go to zero. Can it go down, big time or up big time? Yeah, I think the semiconductor index dropped from the highs to the lows. It dropped, what does that say, 68%, which is crazy because the stock didn't even drop that much. Nvidia didn't even drop that much. Nvidia was only down 34%. But from the lows to the highs, it's already got all of that back. Now, this is why I said you guys should use your eyes. I know this doesn't make sense. You're like, hold up, Joel. If I buy it here and I short it and it's 65% here, why isn't it 65% back there? That's just not how it works. That's why it doesn't pay to be a bear. This was 65% drop, but it only took 9 days to get that 65% back. All right. So it pays to be a bull after you see something drop like this, or when you see the volatility index hits one of these indexes, then going and buying the triple S&P 500 or the triple NASDAQ is a way to get your money back if you had. And this is when you guys get a little bit more advanced, because if you're not advanced and this is over your head, then don't worry about it. All right. But other than that, and taking the picture away, you guys can see right here the 513 cross, and now it's starting to go up in value. But be very careful when you're trading something like this, and you can also trade options on it. Okay, these options are down like what, 50%. So be careful when you're trading them. Usually when I trade something like this, I'm just going to go straight stock. I'm not going to go options. All right, so I'm gonna have to slow it down here. Although I wanted to get to everybody's stock, which I think I did. Ha 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 ha. Somebody. Oh, the last question is, how do you get access to Ask Joe GPT? All right. So there is an Ask Joe GPT video that I did 2 weeks ago. So if you're in the Insider Trading Room, go there. If not, you can go to my YouTube page. What would Joe do? You guys are going to like the page on YouTube or like the page on Facebook and watch my Ask Joe GPT video. The quick answer is you need to open up a Chat GPT account. And then once you open up the Chat GPT account, you can ask or go to Explore, and you go to the search tab, and all you have to do is type in Ask Joel GPT. And then once you type that in, and I can show you guys as well, you see how you have Explore over here, and you see how it also remembers everything that we put. It also remembers everything that you put here. Like I was playing around with it just to see what was Trump's daily controversy. And it literally, what's interesting is when I typed it, which was hilarious. Oh, it didn't pull it up. It literally told me what he was talking about when he was on stage. It says unable now because I clicked on it instead of typing it, but that's fine. But when you guys go to Chat GPT, which I just messed it all up, you should be able to go to Explore. Geez Louise, it's not even coming up anymore. You can go to Explore, and then you can pull up my Ask Joel GPT. All right. So I'm gonna go ahead and get on out of here. I got a tea time at 3:30. I got a tea time at 3:30 that I have to make. So I'm coming to you guys from Decatur, where it's greater. Y'all know my messenger is open. If you have any questions or concerns about the market for free, I'll answer it for you. If I'm up and about, you guys can send messages to me any time of day, 3, 4 a.m. I don't care if I'm up. I'll answer it for you. All right. And that's just what I do for people. I love the market. I buy the market all the time. That's why I share a lot of my receipts. There's so many other people that have bigger receipts than me. I just do it because I want you guys to know that I'm legitimate. I'm a legitimate trader and a legitimate investor. I love to teach. And that I found out what my purpose is. I make a living and all my money through trading and investing. So that allows me to be able to give. All right. So I'm coming to you guys from Decatur, where it's greater. I'm out of here, and peace out.